I've started trading in 2020 during the COVID period. And yeah, pretty much, like everybody else, we all look to make a little bit of extra money. And I really, really found a passion for trading. I love the financial markets. It's something that I really, really enjoy doing. And because of this, obviously just trying to learn more about it. When we start out, we're not really sure where to go, which way to navigate ourselves. And because of this, we make a few mistakes. But that's all normal. It's just part and parcel of the journey. And yeah, it's where we have to begin, and it's where the journey starts. And for me, I've tried trading robots, I've tried signal groups, I've taken a lot of courses. For me, I don't see it as a loss, rather as lessons learned. And I believe that's the way that everyone else should approach that phase within their trading journey when you are learning to trade, right? You're going to experience ups and downs, just like the markets has. And as long as you don't give up, you don't quit, keep going, keep the grind, put in the extra hours, you will become consistently profitable. All right, so that's just a little bit about me, my background as a trader, and the outcome or goal for this evening is just really to share with you a bit of my experience, focusing on the market structure part of trading. And I just want to say thank you to 9X Markets for giving me the opportunity to come here this evening and speak with all of you. Now, just a quick question before we get going. Who is new to trading? All right, you've never traded before. I want to keep this interactive. So in the chat, please do just give me a yes if you are new to trading. You've never traded financial markets before. This is your first endeavor into it. Please just give us a thumbs up or type yes in the chat. All right, brilliant. We see a few responses. That's really good. One thing I didn't share about myself is that I'm a licensed football coach, and running my own football academy currently in Dubai, teaching people, helping people. This is all part of my passion. So as we dive into this market structure 101, I really want to keep it engaging, keep it interactive, because that way you guys at home don't fall asleep. You get to be focused. So let's keep the energy up and let's move forward, right? So we know and we understand who is new to trading, who has already started the journey of trading, and you might be in that phase where you struggling a little bit to find that consistency, get more withdrawals than blown accounts. If that's you, just give me a thumbs up as well. You have been trading, but you're just struggling a little bit to find that consistency. All right, brilliant. Okay, so ultimately, whether you're just starting out or you're looking to become consistently profitable, what we're going to share this evening, hopefully this will resonate with you and you can use this within your own trading journey, and it will help you build confidence. So when you're with your laptop or on your mobile, you're analyzing the charts, you're going to have confidence, you're going to develop that self-belief to help you get to that level of consistently profitable. All right, our webinar structure, we're going to look at 5 points, right? The first point being the basics. So we're not going to be giving any special sort of techniques or anything like that in that first phase. All we want to understand is what is market structure. Secondly, we're going to look at price levels. Thirdly, support and resistance. What is that? How can we use it in order to better position ourselves within the markets? And then point number 4 and number 5, pretty much we're going to consolidate that into one. But the sessions to trade, what are they? When should you be trading? And high volume trading times. All right, so let's dive into section 1, market structure. What is market structure? All right, I'm sure many of you have heard on YouTube or chatting with a few friends what market structure really is. And at a base level, all it really is the arrangement of price on the chart. Okay, so generally speaking, price can either create an uptrend, so moving up, creating a series of higher highs and higher lows, right? That's just the very basic of an uptrend. And downtrend, when price is moving downwards, right? We're creating a series of lower highs and lower lows, right? The third phase that the market could be in, okay, is a consolidation where the market or price pretty much just moves sideways. And we're going to show you a few clips of what that looks like before we actually go into the charts. Okay, so an uptrend, right? Price is at a certain level. Let's just say for a number, it's at $1,000. We're looking at the gold chart, for example, and price rallies up to $2,000, okay? And then it has a little bit of a retracement that does not break $1,000, okay? It might retrace up to $1,500. That is just a retracement or a pullback, creating another point in the market where the market now will rally upward. Okay, so if we look at this little chart over here, or this image that kind of depicts the very basic view of what an uptrend looks like. Okay, what is a downtrend? Simply the inverse of what that uptrend looks like. Its price is starting to come down and it creates a low, moves up a little bit, and then continues the move down. So just looking at this again just gives you a basic sort of picture or vision of what a downtrend looks like. And lastly, the consolidation, where price just ranges or moves sideways between two price levels, right? So it doesn't really, it's not a trending market, it's not moving up, nor is it moving down. It's just stuck within two price levels. Okay. To keep this engaging, okay, I just want to ask a few questions, so we've got a little bit of a quiz. All right. What confirms an uptrend? Okay, do you guys want to answer that? What confirms an uptrend? All right, how do we know that the market is in an uptrend? I mentioned that a little bit earlier. So in price, that arrangement of price on the chart, what confirms an uptrend? All right, the answer, so price creates higher highs and higher lows. All right, so if you got that answer correct, yeah, you're on the right track in understanding what an uptrend looks like. Okay, let's go for our next little question over here. A price consolidation is when price makes lower highs and lower lows. Is this true or is it false? What do you think? A price consolidation is when price makes lower highs and lower lows. All right, let's move on to our little answer over here. And it's false. Okay, remember, price consolidation is when price moves sideways, right? We don't create higher highs and higher lows, all right? We're moving sideways. Okay, everybody good? If you're good from that first little section of what is market structure, just to recap, uptrends, downtrends, price consolidation, is everybody good with that? Just give us a thumbs up if you understood that 100%. Let us know, yeah? Brilliant. Okay, section 2, price levels. Okay, when we speak about price levels, there are a few points that we need to take into account. When you do a little bit of research, you'll understand that psychological numbers, prices that are, you know, like 20,000 points on the NASDAQ or 10,000 points, these round numbers often act as magnets or barriers, okay? So price could be drawn towards it. Price tends to often react from these prices. And in general, a lot of the trading jargon, it's often kind of refer to as major levels or key levels, these types of things, right? But ultimately, price is just getting a big reaction from a certain price point. Okay. We have also what we call historical reaction areas, right? Or price zones, where price may have reversed. For example, at $2,000 on gold, if it reacts off that level multiple times in the past, that's also going to be seen as a major level, right? Price ranges, this is a very important part of understanding price levels. It's a high of a range and a low of the range. This, for me personally, is something that I use daily on the charts. It's a really go-to sort of setup for me. Understanding when price breaks out of a certain range, it's really significant within the market, and it can sort of give us ideas or confirmations as to what to look for and where we should be positioning ourselves. But all of this we'll go through on the chart as soon as we complete this little presentation here. All right, I hope you guys are enjoying this so far. If you are, please just give me a thumbs up. It really helps me. Thank you so much, guys. Okay, now I want everyone just to look at this chart, right? This is a chart of the NASDAQ 100, the indice, okay? Buy or sell, what's happening, right? So especially for the new traders, it's very daunting when you come into the financial markets for the first time. You're looking at a chart and you must be asking yourself, like, what is going on? Okay, and to be quite honest, at the beginning, yes, okay, it is quite challenging. However, once you understand and you implement just a few points to your trading, you'll find the market is not such a dangerous place. Okay, so our next slide, I'm going to add just some round numbers, okay, to the chart, and I want you to tell me what difference can you see, or do these specific price levels help you make sense of the chart? Okay, so just take a mental picture of what this chart looks like right now. It's pretty much just candles. Keep that in your mind, and when we come to that next slide, I want you to see the difference between the two charts, right? Okay, so let's look at this. All right, price levels, when we add them into the chart, they help us make smarter choices. Okay, now just in the chat, the difference between the two pictures or the two images there, all right, the one without the price levels and one with the price levels. The price levels, I want you to tell me very briefly, just type in the chat, does this give you, or can you see a difference on the chart right now? Just a simple yes, no. I just want to understand when and what you look at the moment. Okay, let's go back to that previous slide. Okay, this is the NASDAQ chart without price levels. Okay, and this is the NASDAQ chart with price levels. Okay, so we've got some saying no, others saying yes, there is a difference. Okay, the way I'd like for you to see this is the turning points in the market, where they happen. Okay, when we do not have any price levels on the chart, all we see is price just turning, coming down, going up. Okay, and when these price levels are either broken above or broken below, they're going to be used as support and resistance areas. Okay, so if price breaks a certain level to the downside, all right, and then as price moves back up, it's going to be used as a resistance. Okay, but we'll get more clarity when we actually dive into the chart. Okay, now on the next slide, we've added midpoints to each major price level. So there's a gray line in between the blue lines over there at the moment. And those are middle points between those major price levels. So this will give you an even better understanding of where you can anticipate price may either continue in a certain direction or reverse. All right. So earlier, we touched a little bit on turning points in the market. All right. And this is where I'd like to focus a little bit of the time, focusing on support and resistance. And the way that I'd like to give an analogy of this is support being the floor that you're going to stand on, and resistance being the ceiling that will prevent you from going up to another level. Okay. In order to get through that level, we've got to use a bit of force, right? So keep that analogy in mind. Okay, so some of the key principles. Okay, so when price and breaks and closes below support, that price level now becomes resistance. Okay, and if you look at the screen over here, you can see I've tried to create a little bit of an image to give you an understanding of what that actually looks like. So previous support becomes resistance. Okay, that's something that I really want you to keep with you. If you have a notepad, write it down. Okay, and we don't just go in and sell at any resistance area. We have to wait for confirmations of that now resistance level. Okay, so just to recap, when price breaks and closes below a support level, it can be seen as a resistance, right? Moving on, the inverse of that, okay, if price manages to trade up and break through a resistance level, okay, that now becomes a support. So basically we're moving from the ground floor to the first floor. Okay, we've got to move up, and then that ceiling now becomes our support where we can stand, and it will support price and hold price for however long of a period before it looks to progress and move on to the second floor. Okay, so if we look at the picture again, price breaking and closing above, retest as a support before a continuation, we have to wait for confirmations of that now support level. All right, so 2 points to take away from this. Support, once it's broken, okay, we've got to wait for a confirmation, and it now becomes a resistance level. Any resistance level that's broken above, now after a confirmation, now becomes a support. Okay, and here's a little image of what that looks like. Okay, so the area between price levels that prevents price from moving lower, that is going to be our floor or our support. Okay, and we're always looking to take and move to higher prices in an uptrend. So if you look at this picture, we start at $1,000 and we move up into that 1,150, 1,100 area, which was a resistance. We managed to trade above it, and then we came down to test it as a support before continuing to that next level. All right, if this gives you a good image or a good picture of what support looks like, please give me a thumbs up, guys. I'd really appreciate that. Is everybody with me? Everybody understands? Okay, Wayne, I'm just going to reference you based on your chat. In the chat, you were struggling to find an understanding. Does this help you a little bit? Okay, brilliant. Thank you, Sahil. Okay, now let's move on to resistance. Okay, so the area between price that prevents it from moving higher. Yeah, so once price is broken to the downside, okay, so it breaks a support, it now becomes a resistance. Okay, and price will continue moving down to the next support level, and once it breaks that, it's going to test and then continue moving down. That itself will show and explain really what a downtrend looks like. All right. Okay, perfect, Wayne. Yeah. At the beginning, I know this stuff, it can be a little bit challenging to grasp at the beginning. But as we always say in trading, patience pays. And just consistently spending time on the charts, you training yourself as well is going to really level you up as a trader. We all learn through different methods, but one of the best ways to learn is actually through experience. So putting in the time, analyzing, back testing, you will get to that stage where it's automatic. All right. Before we move on to section 4, everybody good? Everybody understands that main point of support and resistance, and just being in mind, it's very basic, okay? Especially here on this presentation, it's a very basic approach to understanding the fundamentals of support and resistance. Okay, perfect. All right, sessions to trade. Okay, I'm just going to ask another question. Who knows the 4 different trading sessions? Okay, if you know 1 or 2, you're more than welcome to type that in the chat. What are the 4 trading sessions? Okay, Vikas shares Asian, the European session. Good. Okay, brilliant stuff. Thanks so much for the interactions, guys. All right, so we've got a few responses. So the Asian, London, New York, okay? And I think what's really, really important is to understand wherever you sit geographically in the world, right? What your schedule looks like will determine which session you should be actively trading, okay? Also, another key point to note is if you are trading the NASDAQ, the US 30, which is the best session that you should be trading, okay? For example, would you trade the NASDAQ during the Asian session? Yes or no? What do you think? The NASDAQ being a US asset or a US instrument, would you trade that during the Asian session? Okay, brilliant. All right, why would you not trade it during the Asian session? Okay, and that's simply just because you'll have low volume, right? The NASDAQ being an American asset or a US asset, you'll get the most amount of volume, and the proper moves will operate within the US session. So that would be the optimal time to actually trade that financial instrument, right? Okay, thank you so much for those responses, guys. We have a smart bunch of people in the session today. Okay, so the Asian session pretty much comprises of 2, which is the Sydney session and the Tokyo session, all right? And then we have the London session and the New York session. Now, this little image, you can get off Baby Pips, you can get it off the internet, just to help you understand where and when you should be positioning yourself and taking trades, right? So if you wanted, you could just go on Google and you could get this information quite easily. All right. Now, moving on, or before we do that, I just want to ask you, who trades the NASDAQ, the US 30, and gold? These are all the popular instruments to trade. I just want to know from you, what do you trade? So in the chat, please do just write down or type it out, which instruments are your favorite instruments to trade. Nolan says the US 30 and gold. Gold US 30. Sahil says the one which gets more profit. 100%. Okay, so we have all high-risk people because they're volatile instruments. And yes, 100%, we need the volatility in order to profit and to have those opportunities to make money in the markets, right? So that's great. Before we dive into the actual charts, okay, are there any questions that you might have based on the slides that we shared with you now? Any questions that you might have, anything that you'd like to ask, please do just type it out in the chat. Okay, so we've got a few questions. How to spot entries for maximum profitability. All right, when we go through the charts, I will share a little bit of information with you and hopefully help you understand or answer that question. Can you start with $60? I think it's a good question, but I don't think it's the right question to ask, right? Why do I say this? You should be focusing more of your energy into managing your capital, right? And that unpacking that, really looking at your risk management, and not just looking at profits, etc. Right? So, can you start with $60? Yes, you can. The question is, how difficult might it be to manage your risk with that amount of capital? Okay, these are things that I would rather spend time focusing on. What lot sizes you should use with a $60 trading account, because we all have to start where we have to start, right? So $60, yes, you can fund that, especially with 9X markets. You can fund with a $60 that you can definitely do. What would be the best session to trade? Well, again, the best session to trade, you've got to look at yourself as an individual. You might have work during the day. You might be able to take a lunch break at a certain time. You might be able to only trade the London session. Being in South Africa, the London session, so trading between that 9-12 o'clock sort of slot, or 9 and 1. Any of those times there, you'll be able to catch some moves. What I'll actually do this evening is I'll show you something that I implement for 9 o'clock specifically. There's another with the New York session as well. There's a few things that you could implement in order to really understand what to do at certain times. Kira Petse says, how to gauge risk to reward ratios. Okay, perfect. All right, thank you for all of these questions, guys. Okay, so let's dive straight into the charts. Okay, I'm going to share my screen, and we'll start with gold. All right, is everybody good with starting with gold? Okay, can everybody see my screen firstly? Okay, brilliant. All right. Let me just do this. Okay, so what I like to do on my trading view is I like to package all of my analysis so that when I need something, I can use it, and when I don't, I can just take it away. All right. Okay, so let's look at the dollar relative to what it is actually doing right now. Okay, so again, focusing on market structure, how do you identify this? Okay, series of higher highs. Okay, so we have a high up here. All right, so we're going to draw our line over there. Okay, looking at the lowest part of this price range, which is down here, right? Okay, and in between this, okay, price trades down, creates a low. Okay, the market moves up, and then we create a high that's lower than the previous high. Yeah. Okay, the market comes back down and creates now a new low. And then we find this high up here as well. Okay, so we can clearly see that for the short term, okay, gold is, or since, just do this quickly, Tuesday, trading lower, yeah? So I am on the 15-minute chart. Let's go up to the 1 hour. Okay, so we can clearly see that since last week, Friday, okay, the market's been trading down. Okay, do you all agree that for the short term, this is a downtrend? Okay, brilliant. All right. Okay, let's just do this quickly. All right, perfect. Okay, so like we said, we have our high and we had our low point. Okay, let me just move this up here for us so that there we go. All right. So price moves down, moves up, moves down, up. Okay, so this is very choppy price action. Okay, however, the overall move is downward. Okay, so we broke the low over there. Okay, which other lows did we actually take out? Okay, if we look at this over here, the market also broke and closed below that. All right. This low over here as well, it was taken out. So what is the price or the market actually trying to do? What do you think the price is actually trying to do? By moving down, what does that actually mean? And I'd like to take this conversation to a specific sort of topic. Okay, not many speak about it, but I think it's something that's Nolan, very clever. The demand is less. Okay. Yes, it's a downtrend. All right. So the way I like to look at the markets is an auction. Okay, so we're always looking to buy at low prices or at the cheapest prices possible, and we're looking to sell them at the highest prices possible, or those premium sort of prices, right? So earlier I made mention of something that I said I use in my everyday trading, right? Because when we have so many lines on the chart, okay, like this, which line do we actually know the market will react to? How do we really know that? Okay, how do we get a real sort of confirmation as to which price level to focus on? Okay, so as we can see, based on off of this at a basic level, all right, price is making lows, retracing up again, continuing to drive down, moving up, moving down, and the market structure is that of a downtrend. Okay, so if we look, earlier I said I like to look at price ranges. Okay, let me just delete these lines for us to give us a clean chart. Okay, so if we look at this price range, okay, I'm just going to bring up a tool called the Fibonacci just to give us an area. Just see here quick. Just edit this to I'm just changing this to levels. Okay, so now all I've done was I've just taken my Fibonacci tool. Okay, and a Fibonacci tool is basically just a retracement tool. Okay, it can give you an understanding of where that 50% area is. Okay, and if I draw a line over here, okay, we can see now where those cheaper prices will exist. Okay, so relative to this particular price range over here, we can see that these prices are going to be the most expensive, okay, or those premium prices. So we'll do that in red. Okay, and here we are going to find some cheaper prices, right, or discount. Okay, so if right now I was to take this Fibonacci and we were to look for the cheapest prices within this range, okay, we can see that it exists here, right? Okay, what about this range? If I move this back down, we can see the discount of this range, okay, which is over here. And if we look carefully, we can start to see how price has interactions. Once we break below, it now becomes like a little bit of a resistance, and the market will seek better prices. Okay, so if we look at this area at the bottom over here, okay, this price was offered over there, and this seen us drive the price all the way up. Okay, all right. And now, if I just take my Fibonacci and I want to anchor it or onto that move over there. Okay, so now I'm just looking at 2 price points, this area here and this area over here. Okay, we can see where that area exists over here. Okay, that midpoint over there. Okay, so this can help you really understand timing of where you should be looking to buy, where you really should be looking to sell. Okay, is this making sense to you at the moment? Okay, please type in the chat if so far it is making a little bit of sense for you. Okay, brilliant. All right. Yeah, let's just delete all of these things here quickly. Okay, so when understanding market structure, and we understand that what the price is actually doing is trying to get or seek out better prices, okay, we can then understand that when I look at a particular low or a particular high, all right, I need to understand where, number one, I should be looking. If that's the high, okay, this is the low. This was a low that was broken. I'm going to change this color to red. Okay, we can see that the price traded down, broke below that area, retested and continued to trade lower. Right. When the price came to this area, okay, let's just mark it out. Did we get a close below this particular red line or this low over here? Okay, we did not get a close below. Instead, the market came down, traded a little bit back up, and then opened over here. Okay, and while doing that, price created another little price range for us here. Okay, and the market broke above. Now it left a high as well over there. Okay, and breaks above, fails to close below. So what is it going to do now? Who can tell me, based off of this price arrangement here? Okay, we broke out of this range. So as we can see, it was previously a resistance point. We broke out of the range above the resistance, came back, testing it as a support before, continuing higher. Okay, so if we look, which price range started the move all the way down here? Okay, this is something that we've got to look at. Where is the high that started this move? Okay, we've isolated it here. That one over there. Okay, that's the start of the move down. Okay, we can also say that this here as well we created a low, then a lower high, because this low is now lower than this high. Okay, right? We started to trade down quite aggressively from there. Okay, now when we look at this, okay, if we simply just take our Fibonacci tool again, okay, and we can see how price reacts to these areas. All right, and I want to primarily focus on just that 50% area. Okay. All right. Let me just take the 0 out. Okay, so of this particular price range, I want you to notice how, okay, we're just going to focus on this one. If we look at, as soon as it breaks above, what are the interactions we get? Okay. We get the closes above, and we can see price currently is also reacting to this area. All right. That's of this particular range here. What happens when we move this into this area? Okay. That range that we said that was broken below. All right. We can see again how the market has reactions at these areas. Okay. Now, there are other ways of identifying these spaces. And if we go back, we can see again that here another range was broken. Okay, we have our high and we have our low over here. All right, and we'll reference this particular area. And we can see when price trades back up into it, we get these reactions. Okay. All right, and if I move this and I just place this at the low of this particular price point, and up here, okay, we can see how we can identify certain areas, okay, of that support and that kind of where the resistance will come from. Does anyone have any questions so far based off of this? Okay, Sahil says it's very confusing. Okay, what's confusing about it? Okay, let's look at it. What's our first step? What should be our first step? Because after this, what I'd really like for you to be able to do is have a bit of confidence when you go into the markets tomorrow. You're sitting down at your chart. Where do you start? What would be a good starting point when you dive into the charts? Everybody's favorite question, where do we enter? Okay, so again, that will boil down or come down to the session time. Okay, earlier I said I would share something with you, and I'm going to just do something quickly. And what I basically look at, if I'm going down to the 15-minute chart, okay, we'll do a little bit of an example here.
And I just want to find a 9 o'clock. Okay, the 9 o'clock candle. Okay, which is this one over here. All right. Let's go and see again. I'd like to go through a few examples of this. So if you're going to trade the London session, all right, this will give you an idea of where and when you should be looking at.
Okay. So in this example, all right, in this example, we see that at 9 o'clock, the market's opened on Monday. Okay. We started to trade within this area. Okay. Now, when it comes to where or when you should be entering, okay, there's a few tools that one could use. Okay. And one of them that I like to use is a Fisher transform. Okay. So maybe you could use this as well. Okay. And this will help you when you're looking at the market structure, because this is going to show you, all right, if I reference a certain point here, okay, the market or price at this particular time is trading downwards. Okay. But what do we see on this side? Okay, we see the opposite happening. Okay, and this is just referred to as divergence. Has anybody heard of the term divergence before? Okay, in the chat, who's heard of divergence? Okay, Kira Petse, heard of divergence. Okay, what does that signify? Okay, that there might be a short-term sort of reversal that might be taking place. Okay, or the market could change direction as it's done here right now. Now, to answer Sahil's question, where would you enter? Okay, if we look at the time here, okay, it shows 3:15 in the morning. Okay, I'm not sure about you, but I'm not awake at that time. Okay, but when might we be awake? Okay, we look at the 9 o'clock and we want to see, okay, we don't just enter a trade at 9 o'clock specifically. All right, but what we'd like to see, what I'm going to do is just reference, okay, this point over here. Okay, if we look at the point that we can see on this indicator over there, okay, it's got a reference with a specific candle. Okay, and all I'm going to do is that. All right. So once price closes below this, okay, closes back above, and we can see how it's interacting with a specific area. Okay, this, once it breaks above and we see that we have the divergence, we understand that price is coming down, yet the indicator is showing us that price is actually heavily oversold and is looking now to start moving up. Okay, if we come down here, there's another area or another point of reference over here. Okay, so there's another candle here. And we can see that it's going to use it as support before it continues to move up. Okay, so that's just a little bit of a tool that I like to use in order to help me understand where and when I should be looking to enter the market. Perfect, 100% Chiara Pezzi. Okay, so just to reference this quickly, so if you look at my chart, I have these pretty much set up everywhere because it's something that I'm looking at. And you might look to take an entry off the 5-minute chart. Okay, once we get a break below or a break above, and we can look to trade in that specific direction. Okay. All right, but focusing on the actual topic in terms of market structure, okay, has everybody found some value in terms of where you should be looking and how to really read the chart, looking at the lows, looking at the highs that were broken? Does this give you more of an understanding, hopefully a little bit more confidence into where you should be looking, what you should be doing during certain times? Okay, so all I'm doing right now, I'm just looking at these previous lows that were broken, and we can see how once the price breaks below it, breaks and closes below, how we get the reactions from it, those continuations. Okay, and if we understand correctly that price will always look for cheaper prices to buy from, okay, so if we look at the low down here, all right, you can see we traded below it, but we did not close below it, okay? Traded below, but we did not close below. Okay, the market will always seek higher prices. And which was the point that drove the market towards this price level? Okay, it came from here, from this area right here, right? So naturally, it's going to try and offer a better price than that. I'll just do this in a dotted line, that there's a little bit of a difference. Okay, so always understand, be patient, wait for a confirmation, whatever that might be, whichever trading strategy that you utilize, wait for a confirmation before you look to take a trade. You cannot just set a trade. For example, if this was your area, you cannot just set trade and hope that it will come down at that particular level. Especially if you've got a $60, $100 account, you've got to really understand where and when. Wait for your confirmations before you get into the market. Yeah, so when it comes to TradingView, this particular tool, okay, all traders use this to analyze where price is or what they have to do next to develop trading ideas. And for you, again, it just takes practice. The Fibonacci tool, all we have to do is look on the left-hand side over here, and you can see I've marked mine as a favorite. That's why it ends up here. But for you, it won't be. All you have to do is click that, click on it, and yeah, you will be able to get these tools as well from this particular setup, right? How do you edit the settings? I think we can leave that for a separate video, or not a video rather, but a webinar. But just to make sure that before you leave, all you have to do really is just come over here, type in 0.75, 0.25, 0.5, 1, and 0. Make sure that they checked, and then just click OK, and it will give you this. Okay, mine is set to price, but you can also just have that set to levels, and it will give you those levels over there. All right, and we can just, yeah, simply just wait for price to break below a certain area. The way I trade, I actually have a different variation of the Fibonacci. All right, and yeah, my mentor really helped me a lot and showed me something which I don't really feel comfortable sharing because, yeah, it's knowledge that I had to pay for, and it's also his intellectual property. But what I can show is just pretty much how it works a little bit. Let me just do this quickly. And this will really, because I took a gold short, and it will really show you where you should be looking at. Okay, it really just makes life a lot easier. So this is my Fibonacci, and I'm looking at these areas. So that would be my first resistance, sort of second, once we break below it. Okay, and where do we trade down to? The first take profit will just pretty much be down here. The second would be over here. And it's just a systematic sort of approach. Okay, the market will go down there, and you can see today the market reversed from this particular area. And yeah, this is the way that I trade. Just basically looking at price ranges. This is the recent one that was broken, and this is where I took my position, right there. Okay, so this is what my trade looked like. You could have a tight stop like this, or the actual stop would be up there, and I targeted this area over here. Although the market came down here, that's where I got out pretty much. Okay, so these types of things, again, it just comes with experience. But just based on what we did today, all right, looking at, this was the price range that was broken. Okay. And where did the price start driving up from there? Okay, because this move from here, price failed, yes, although we broke this high. Okay, we failed to break the major highs up here, which was this one and this one. So in order for price to go up there, it needs to offer a better buying price, right? And where would that come from? Here you have a range, okay, of where this big move started. And where did it come to? It traded all the way down there. All right, and currently, it is just testing and currently buying off of that 50% area. Let me just do this. All right, buying off the 50% area over here. Okay. And if we look at the indicator, if we look at this low over here, where does it line up with? Okay, this is what I showed you a little bit earlier. Okay, this particular low right here, this point over there, okay, it lines up with this candle right here. And that's what caught the market today. All right, guys, I'm just add a middle line there, and that's what caught the market today. So this is just the way I trade, what I utilize to give me a confirmation. And yeah, I really hope that today helped. If you did find some value, please just give me a thumbs up. And yeah, we're going to be doing a few more of these, and I really look forward to interacting with you where we can move forward from this, dive deeper. So now we've got a little bit of a base. Where can we move to from here? And at the end of the series, I know that 9X Markets really wants to help and build you. So each webinar will build you. And yeah, I think for me, if anybody would like to reach out to me, I don't run courses and things like this. But more than happy to interact with you, build a community where we can ask each other questions, analyze the charts together. I'd be more than willing to do that. So if that's something that you would like to do, yeah, you're more than welcome to reach out, and yeah, pop me an email. I will just type it in the chat. Okay, that's just my community. It doesn't cost anything. Like I said, I don't run any courses or anything like that. But I just want to build a community of like-minded people, like-minded traders. And remember, I'm just like you. Every day I've got a job, but I'm also just using trading to generate some extra income. So just want to say thank you once again to everybody for joining this webinar. And again, I really hope that you found some value. And I look forward to hearing from you. See you soon. Thank you so much.